Hey guys, my name is Mike Munzing with Munzing Mortgage Group. I'm bringing you another video. Now I'm shooting this a little bit early in the week. Got a crazy week. End of the week's out of control, so I knew I wouldn't be able to get this done, but I've got some important things I want to bring to your attention. Now you may be noticing I've got a little bit more scruff today. I actually was over at Saddleback College. If those of you who know me know I'm a little bit politically inclined. They were actually having a socialism symposium, kind of promoting socialism and Marxism to the students over at Saddleback. I was not happy about that. I went over there. Now, I didn't go over there looking like I normally do. I was under disguise a little bit, but can you believe it? They picked me out of the crowd instantly. They knew that I was more on the conservative end of things. It actually ended up being quite an interesting debate. Unfortunately, they would not let me film that. I would have brought that footage to you. But my daughter goes to Saddleback College. I know a lot of your kids go there as well. So I was a little taken back by the fact they'd be teaching socialism and Marxism right here in Orange County. And it was in the Ronald Reagan Auditorium. That's what made it almost worse. So yeah, I'm looking a little scruffy. It's been a crazy day, but had some important financial mortgage numbers to talk to you about. Let's jump into that. Okay, first, if you hadn't heard, FHA, as of April 1st of next month, they're changing their numbers again, their cost, what it's gonna cost your buyers to buy a home with FHA. They hit both points now with regards to the mortgage insurance. They did not change the down payment amount, but they did change the upfront mortgage insurance rather drastically. It went from 1% to 1.75%. Thus, where it used to cost them an added percent added onto the loan amount, once again, now it's 1.75. And the other half of the mortgage insurance, the other portion of it, is that monthly amount. They call it the annual amount, but it affects them on a monthly basis. That went from basically 1.15 up to 1.25, added 10 basis points to that. A year ago, that was at 0.55. They pushed that up last year as well. So this is getting more and more expensive for our folks to get into those homes using FHA. I think the government's trying to recoup some of that money, some of the losses, so our buyers are paying for that. So I wanted to make sure you were aware of that. You can take a look on the chart here I designed on the side of the video to see where those numbers are. It breaks down some of the other areas, some of the lesser down payment, maybe the 15-year as well, so you can see that. But those are important changes to FHA. You really need to know that. I've been doing FHA for a long time. And don't forget, I love to help your clients with those FHAs if it makes sense and if they have that very small 3.5% down payment. Still a great program for them. Okay, next is Stephen Thomas's report that came out just a couple of days ago. Once again, you can get that at his site at www.reportsonhousing.com. It is a subscription site now, but it's critical when you're working with your buyers and your sellers because you got to know what's coming down the pipe. It's a one-time fee, not quite sure what that is annually, but it's a one-time fee that's well worth it for your business. You get that report every 2 weeks so you can really tell those sellers what to do. And sellers are the important issue right now in that, as you can see my notes here, it says low inventory. That's my top of my header, low inventory. The sellers are not jumping on board, bringing their properties onto the market. This is very unusual for this time of the year and this type of market. This is the lowest we've seen the inventory since August of 2005. I'm kind of checking his numbers here. It is down from the first of the year. Our inventory here in Orange County is down 925 homes to a level of 7,189 properties. That is a 33% drop in the inventory since last year. And as I mentioned, it's unprecedented in this marketplace. And the other side of it is, I'll be touching on it in a minute here, are the distressed homes. So the banks that have a big backlog of properties that they've taken back that still need to be sold. But as Stephen says, they're not getting the right information regarding that. They still think there's a glut on the market of properties, which there is not. So they're holding off on bringing those properties out. He does believe, we talked on the phone maybe 10 minutes ago, He believes that they're going to get that information fairly quickly and we'll be bringing those properties on the market. But the good news is there's a pent-up demand from the buyers. I know I'm talking to a lot of buyers getting out there ready to buy, and that should absorb a lot of that. So hopefully we're still going to end up with a fairly balanced, not a big dropping market, but there's an issue going on out there. Okay, next I want to touch briefly back on that demand. It has remained level. It's a short month. February is obviously the shortest month of the year, and it's remained level at about 3,553 properties currently in escrow in Orange County. That's how Stephen justifies or figures out the demand. And finally, the distress market has dropped again. It's had its largest drop since the beginning of this whole downturn in the market. So the banks are not getting the word that it's a hot market for the buyers, or the buyers are still out there. So I think they're not quite looking at this right from what Stephen says. So hopefully they'll get the word, bring more properties out for us, and we can get those properties sold to our buyers. Don't forget, in the report, Stephen really breaks down, I'll say, the minutia of all the numbers, city by city, market by market. You can show this, you can look at the distress sale market, you can really break down the fine nuance of those individual numbers, so you've got something solid to talk to your buyers about and your sellers about. Hey, we're heading into the weekend. It should be fantastic. I am working. I've been hearing from more of you, so I love that. My phone's been ringing, but I want to hear from you. I want to hear from you and your buyers. You can use my online application. I often mention that. It is a great tool to get your buyers approved quickly. They fill in their information. It comes right to me, night and day, 24/7, and I can break that down, pull their credit, see what they can do, and we'll get them ready to go. It's a crazy market. I'm sure a lot of you have seen that. Escrows are getting tougher by the day. The lenders are getting more strict, but you gotta work with those of us who have been around a long time. I've got 28 years in real estate and lending, 22 years strictly in the lending industry, and it helps that we know what's going on. So God bless you. God bless your families. God bless our country, and help us with this market, God, please. But I'm here for you. I look forward to working with you. Call me anytime, 949-689-5626. We'll work together. Thanks. Bye-bye. Money, 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 money.